What's up, guys? It's Matthew Campoli. I'm your host, the Price to Sell podcast. And on today's episode, we were blessed to be in the presence of the man, Mr. Daniel Foch from Rare Real Estate. You've probably seen him all over social media. He does a lot of those talking head pieces where he's, talking about data and news, and just he's become a really trustworthy source when it comes to real estate. He's all in on his craft. He's a wizard at what he does. So you guys are going to love him. He's super high level, very smart. So I would maybe get ready to take some notes on this one. We're going to get into interest rates, the economy, investing, proper investing, mistakes investors make, all of these things. I think you guys are going to love it. So thank you for tuning in. Enjoy the show. What's up, everybody? Welcome back to the Price to Sell podcast. I'm your host, Matthew Campoli. And today, like all the other days, we bring the heat. We bring the heat. You may have seen his head floating over just a couple of news articles. We have the host of the Canadian Investor podcast, investing wizard, and director of economic research for Rare Real Estate, Mr. Daniel Foch. Thanks for coming, man.
Thanks for having me. I've been waiting for this call for like years, ever since you started this thing.
That's awesome.
Good. Yeah, no, I'm excited to have this conversation.
It was all the talking heads. You kept popping up.
Yeah. And you're always
in my face,
Yeah, and you're always in my feed too with stuff from this show, and I've really enjoyed when you reached out to me, I listened to a lot of the most recent episodes, and it's really good shit. It's doing good stuff for the industry. So
thanks, man.
Yeah.
Well, I mean, it's a lot. We talk about a lot of the same. We hear everyone's stories. I mean, with you, it's definitely going to be different because I feel like your knowledge is unmatched, in my opinion.
Well, I appreciate that.
Yeah, of course, man. You've become like that trusted guy for the facts.
Yeah.
If you post something, I believe it instantly.
Right.
I won't even fact check it.
Right.
Yeah. So you've created like this trust in the industry for people, like other people in the industry, for consumers. So you've done a great job. So I want to applaud you with that.
Thank you.
Yeah, of course, man. But yeah, let's get into. Everyone sees your analytical mind. Everyone sees you spitting the facts. But who is Daniel Foch?
Yeah, so I mean, I'm a real estate broker, and I've been in the real estate business basically for my entire life. Both my parents were in it. My dad was doing commercial stuff, a lot of land back in the day, land banking for subdivisions, sites that are getting developed into industrial parks today, 20 years ago. My mom sold residential, and then and I actually grew up like almost resenting the profession a little bit, just because I was a kid, and
That's all you heard.
Well, not even that. It was just like, what are your, you just don't like what your parents do, right? And then I worked in the agricultural industry. I worked in horse shows, like doing picking up the rails when they knock them down, like in show jumping. Traveled around doing that. The farm I was at got hit by a tornado, and that kind of like changed my life a little bit, because I probably would have done that forever. I was like totally happy, just like, doing.
Where was this?
In Newmarket.
Okay.
Yeah. And then I was like, okay, well, I was living out of my car for a little bit, just like vagabonding, being, and not to say like I had any like economic issues or anything. That's what I chose to do at that point. Just traveling around to horse shows, and I got conscripted to the Swiss Army, because my dad's side of the family is Swiss.
Cool.
And they have this like citizenship repatriation thing going on. Mm-hmm. So they asked me to come be part of the army, because they do that to every Swiss male who turns 18. And I was like, you know what? Like, I got nothing else going for me. Like, let's just go. So I went, and then when I was there, I was like doing all these like backpack hikes through the mountains and
That's
all
cool,
this
man.
shit. Yeah, it was really cool, but it was hard.
Is that the uniform right there?
No, it would be funny if I was wearing it though. And I realized like I'm just like, I'm not gonna be able to do this shit forever, right? Mm-hmm. Like physical labor, and so I contacted my mom when I was away, and I was like, how do I get like more involved in the real estate industry? My parents still really wanted me to go to university. This was like all right after high school, and I was like, I took a gap year, because I was like, I'm gonna fail if I go to university now, and I probably was right at that point. Found a co-op program at the University of Guelph, in the real estate space, got to work in the industry, which helped me kind of like balance that not being good in school stuff. And then got a lot of industry experience, worked as an administrator, front desk of a real estate brokerage, like 20 hours a week throughout university. So I got a lot of experience. Yeah, wrote a lot of offers, interacted with a lot of agents, just like, and then I kind of just like fell into the industry. Like I was surrounded by it my whole life. I had a little bit of experience in it. I was like, started a small business making content pages. At the beginning, it was like Facebook, YouTube and Twitter for realtors back in the day. Sold the business.
Oh, that's cool, man.
Yeah.
What's the timeline here? Like what year are we talking?
I don't even know what year that would be. Like, but that would be like 10, 15 years ago now. 10
Okay.
years. Yeah. Because I've had my license for 9 years. So 2014, I think I got licensed.
Cool.
Yeah. So that would have been like 2010, 2011 kind of thing.
Really cool.
Yeah, I mean, yeah, I guess it's kind of like, it's boring to me, but it's like, it's just funny because I've always been in it in different capacities. And then it all just kind of came full circle with like, I didn't really do much content. I was really like a cold prospecting guy until COVID hit. And then I was like, okay, well, I can't cold prospect. Like I was getting cops called on me for knocking on people's doors at the beginning of COVID. Yeah.
Was that your form? Were you door knocking?
Yeah, I like door knocking, I like cold calling for
Cool.
sure. Yeah. And then, so I was like, okay, I got to make some content. And then I just started playing around with it. And here we are, right?
Yeah, man.
Yeah.
Well, you literally just said that right before we got on. You're like, you doubled down during COVID.
Yeah.
And I think it was either you did it or you didn't.
Yeah, for sure.
It was like two extremes.
Yeah.
I did.
Yeah.
You definitely did.
Yeah.
And what do you think that's done for you?
I would say like, I don't have to market anymore. Like now that I have obviously it is marketing, but like I also love it. Like, I mean, I think it's worth noting that like most of us who do content at scale are like probably relatively addicted to social media. And if you can kind of, I think most people are anyways. So if you can kind of like have that and just understand that there's like this dopamine reward system that exists for most people with these red notifications and whatever, like that Netflix documentary.
Yeah.
If you can tailor that to like, that's your business, right? And that's feeding you to grow your business, then I guess that's a good thing. And so, that's kind of where I'm at with it. It's like, I would be doing it anyway. I would imagine probably I would just be like scrolling or doing some other mindless shit. As much as I'd like to think that I'm like above that, I'm probably not.
Yeah.
So
we all are.
now it's just like, it's just like pure business for me, which is good. And it helps me. Like I literally don't have to, I still like going out to get business, but I don't have to.
Yeah.
Yeah.
That's awesome.
Yeah.
That's amazing, man. Yeah. You've done exceptionally well.
Thanks.
I mean, I don't know when we started to follow each other or take note of each other.
Like a year and a bit ago. Yeah.
Yeah.
Maybe. Yeah.
But you just know, like you just see
Yeah.
the same faces. You see who's doing it in like a really genuine way. Like you're just
Right.
being you, man, which is
Yeah.
awesome. I preach that all the time. But like, we have your brain here today.
Yeah.
So I'm going to pick it.
Sure.
Let's get into some things that we've been, seeing recently. It is June 1st, right? 6 days away from this new rate announcement.
Yeah.
We can, by the time this launches, it'll probably have happened.
Yeah.
So you guys know, just, be conscious of that. What are your thoughts?
I would say that, I mean, we're going to see at least 25 basis points.
That's what I'm thinking too.
Yeah, they might even go 50.
Oh, wow.
I mean, like the markets are pricing 44% chance that they're hiking next week and 100% chance that they're hiking at some point by the end of the year. I don't, based on what I've seen from the Bank of Canada, like they tried their first hike, the 25 bips was like kind of that warning shot. I think we're done with warning shots. I think that they're like literally, and we're done with the idea of a soft landing, unfortunately, as much as that sucks. I think that we have to like really smash the economy and employment, especially, into the ground in order for inflation to come down. You're at risk of kind of getting into this like wage price spiral where basically, wages are growing, people get paid more money, they have more money to spend on stuff, and then the cost of stuff goes up, and then that just becomes a big bad cycle of inflation that's really hard to take out of the economy. And so I think that, if you look at recessions have a 100% success rate of getting inflation back down to the neutral range. I think that the Bank of Canada wants a recession. I think that they've realized that they can't beat inflation the nice way, and they kind of have to play the hard way. And I think that the Fed's up against the same thing in the States, and we kind of have to try and move in lockstep. The only X factor is oil, right? Like OPEC and how they behave and whatever. But and if that continues to be inflationary, then we've got other problems. But I think that the policy side is pretty well written right now.
Yeah. And what do you think this means for the Canadian real estate market.
Yeah, it's interesting. So I think that there's probably more headwinds ahead of us for price. But I would actually say that from a volume perspective, if prices come, like we're at a point right now where housing is as unaffordable as it's ever been, like the worst when boomers talk about interest rates being 20% in the 80s, it's that bad. When you hear about housing prices peaking and crashing in the early 90s, 1989, it's that bad.
Hello there, my fellow real estate enthusiasts. Today's episode is brought to you by the one and only Warrior Law, the law firm that's the best in the biz when it comes to closing deals. These guys are not your grandmother's law firm. They complete same-day status certificates and purchase agreement reviews so you can put in your offers without a care in the world. Plus, they're digital, so you can have virtual closings across Ontario. Talk about fancy. And get this, they're available 7 days a week. That's right, no rest for the wicked. They even speak over 8 languages, so there's no excuse for any lost in translation drama. Warrior Law works hand in hand with real estate agents and mortgage brokers, so you know they're the real deal. They'll make sure your transactions are smooth and work around the schedule to get those closing docs when you need them. So, if you're looking for a law firm that's not only exceptional, but also makes closing deals look like a piece of cake, Warrior Law is your go-to. Check out the description in the episode to learn more.
And so usually that corrects gradually until a recession is over. And we're seeing a bit of a run up right now, right? In the spring, about up 11, 12% since the beginning of the year. And I think you usually see about 10% seasonal growth. But I think we're a bit above seasonal growth, which alarms me and probably alarms the central bank as well, Tiff Macklem.
Yeah.
They're probably looking at the housing market and being like, shit, it's not working. Like we got to crank this up a little more. So, what will happen is as things get more affordable, if prices come down, if my assumption here is correct, then more people will be able to buy, and they will. If people, like, everybody wants to buy a house in Canada, and we know we have excess demand for houses in Canada. So prices, like, realtors have this idea that you should be talking about like the market as if it's strong and safe and will always go up, but like, and everyone's like, oh, that's a good way to attract a bunch of people who are never going to buy. But it's like, the market isn't just buyers, right? There's a whole other half of the transaction, which is people that sell. And so I think that when you think about real estate and you think about our profession, we've been getting smoked for the past 10 months, basically, since prices crashed last 100%. Year. Undisputably, volume is down 50%. Total dollar volume is down 50%. So the amount of commission that's being distributed by the real estate industry is half of what it was this time last year. And you have an increasing number of participants in the industry. We have like 100,000 realtors in the province of Ontario now. Yeah. I think it's like one realtor for every, or three realtors for every one listing? No, one realtor for every 3 listings right now.
Yeah.
No, vice versa. Anyway, oversupplied on the realtor side. Yeah. And so like, I think we should be, as professionals, we should be happy if prices come down and more people can afford houses, because that means that we can actually transact. We can actually, and more houses come on the market. Maybe some of these distressed sellers are exiting, which we're starting to see happen now, right? With the consequences of rate hikes and variable rates, pushing people into unaffordability, negative cash flow we're hearing about, sentiment changing, and all this negative cash flow condo investor stuff.
We'll talk about that soon.
Yeah. Headlines are changing, sentiment's changing. And I think that like, there's this idea, the acronym is HOPE: housing, orders, profits, employment. Employment is the last ball to drop, let's say, in the chain of the lags of interest rate hikes, or the lagging effect of interest rate hikes. Housing is the first one. But on the recovery phase, it's also the first. And the housing, like the real estate recession is almost over, right? Price is independent of that. But like recession is how that whole economy is functioning. And we just went through our bad period, and now we're going to go through our, I think we'll have a long bottom, but a growth period, and kind of lead the recovery out. So that's my thought. That's kind of like how I think things are going to play out over the next little bit. And I think that means like you kind of see a bottom in the next 2 years and a very slow growth. Look at like 89 to 2002. And that, I think the setup is very similar. Immigration being the same as well.
So those hoping for like that big boom again within like 6 months to a year, like we should probably wrap our head around this slow growth.
Yeah, I don't know if I see it happening. Like a lot of people say like, oh, there's more people than houses in Canada, or like more, excess demand because of immigration. And it's like, well, the million that we hit last year, their population growth was backlogs. If we hit, right now we just hit a actual record for immigration, 150,000 in Q1 of this year, which is huge. But that puts us on track for 500, 450, 500,000 by the end of the year.
And do you think these these immigration numbers are driving prices up?
Yeah, for sure. Or even if they're not directly, like statistically, immigrants rent for 3 years, and also like half of that population growth is non-permanent residents, so international students, temporary workers, etc. But those are your numerator in the cap rate formula, right? So cap rate is net operating income over price. If cap rates don't change, which they haven't massively yet, I think they will, but it's a whole nother story. But they're your income portion, right? They're your renters. If they're gonna rent, and we're gonna expect that investors are gonna come back and put a floor in the market, as long as income is moving up, then price should be moving up as well, right?
Yeah.
Unless return expectations are changing. So yes, I think that it does, but I think that the challenge is, in order for them to have a meaningful increase in house prices, they need to have money. And right now, banks are constricting credit, and credit costs a lot more than it did this time last year. And that's really, credit drives the market, nothing else. Right?
Yeah.
It's just like, it's all about liquidity.
For sure.
Yeah.
And I want to address, like, you know, you have your average consumer out there. I get these calls all the time, and you're someone who like I actually, you know, give some honest facts here as to what these people, or some proper education. But a lot of buyers, you know, they've been saying like, oh, we're waiting for things to crash.
Yeah.
Or, oh my God, this next rate announcement, things are gonna crash. To those buyers out there, like, what's some advice you'd give? Because it seems like we're gonna be dealing with this stuff for a while. Right. And I think they're waiting for like that magic day where things just go on fire, which is not gonna happen. So how do we address that?
Yeah, I mean, I think timing the market is fascinating, right? Like I'm there's a small chance that there's like, you know, maybe 5 or 10 people in the country who spend more time researching market timing or like what's going to happen with the market than I do, right? Like, I'm not saying that to brag. It's just like I'm obsessive about it. I want to know what happens. I like this stuff. And I would never try and time the market. Like, you know, I bought a primary residence earlier this year because it was the right thing for me to do. And somebody messaged me on, or commented on a TikTok video I posted the other day, and they were like, when's the right time to sell my condo in North York? And I'm like, when you have something better to put the money in. Like that's, if you're thinking about this as an investment, think like an investor, not a stock trader. Like this isn't, and the more we have this like timing and speculative concept, like you'd be better off, like the way I would frame it to a buyer who is thinking, okay, I'm going to wait for the right time to buy. It's like, okay, so you're going to save yourself 10, 20, 30, 50 grand in house price. Let's say if the market actually crashes, it drops 10% and you save yourself 100 grand on $1 million house because it dropped 10%. But interest rates, because what just happened, that we saw that happen 20% from this time last year to this time this year. And so now you're saving $200K on the average Toronto home, but your interest cost is $250,000 for your first term of your mortgage, right? And so it's like, did you really win? Like, yeah, okay, maybe you know, and so I think that you might as well. It's like you might as well try and time interest rates. You know, it's like I'm going to buy when interest rates are perfectly low. It's like it's equally complex and equally foolish to try and time what the central banks are going to do or what the economy is going to do. Like it's all just a bunch of animal spirits. And the final thing that I'll leave a buyer who thinks that they can time the market and buy at the bottom with is they're like, oh, I'm waiting for prices to come down. It's like, well, when prices are coming down, the bottom is being formed, right? Like you create the bottom by being the guy who's underbidding and getting that low comp on the way down. And eventually the bottom happens and then prices start going back up. And by then, like now they're going up and then you're probably fearful again. You're, oh, now it's, you know, it's too risky, or like that's what we're seeing in this spring. You can't see the bottom until it's gone. Yeah, exactly. Right. So it's way easier to get a good deal on the way down than it is on the way up, from my perspective.
Yeah, for sure. No, that's awesome advice, man. I think people need to hear that. And now I want to jump into one of the most trendy headlines we've seen recently in regards to Toronto condos. Yeah. A lot of agents going out there, you know, trying to address, because from outside, just a general consumer reading that title, it's misleading. Right. Right. So more than half of the GTA condo investors losing money on properties, cash negative condos. Yeah. Right. So let's break that down. Yeah. So the first thing I would say is, like, I mean, they're not actually losing money. We don't know if they're losing money or not. Like that, they're creating unrealized losses. So if they sell at a loss, then yeah, they probably lost money. But if they're holding it, which I'm assuming people who are buying real estate are holding with a relatively indefinite hold period, they're not losing money. They are cash flow negative, and that sucks and that's bad, but that's their problem, right? The part that I find very interesting, and like, and especially in the context of Toronto, is like those people losing money are
creating housing supply. Like those condo buildings would never be built if there wasn't somebody lining up to buy that and lose money on that. And so we should actually be thanking these people, not villainizing them or making fun of them for making stupid investments. I think like the bigger conversation from my perspective is, why do we have people who have an incentive to lose money in Canadian real estate or be cash flow negative in Canadian real estate? And that could, it could be things as sinister as money laundering or tax loss harvesting or whatever it is, or that our housing economy is so broken that capital appreciation is going to be that substantial and predictable that they don't care if they're losing money in the short term. But to me, this is a symptom. We're not thinking about the bigger problem, but everybody just, it's a sensational headline, right?
Yeah.
So, but I don't necessarily think, like, I think the pre-construction whole thing needs to change a little bit, and our capital markets need to change. We need to figure out a way to better fund projects and make it more accessible for large scale developers to build purpose-built rental so that we don't have this kind of thing happening. Because now when these projects don't make sense financially, you see what's happening. Like Benjamin Tal estimates 1/3 of condo projects in Toronto are put on hold or canceled. I mean, now you're going to have this huge supply glut where we've got a gap, and this is just going to exacerbate the volatility that we're already seeing in Canadian real estate. So now you've got, this year we'll have less supply than last year, or less supply starting than last year, or we're pre-selling than last year. So in 6 years, when all of those projects should be closing, you've got a huge gap.
Yeah.
And that'll help in the recovery down the road. But I mean, that's a long story.
Yeah. There's a lot of moving parts.
For sure.
A lot of things going on. And as we near the end here, a couple questions I wanted to get into with you. But we spoke on the phone prior to this, and you spoke on the speculative era of real estate investing. So what do you mean by that?
Well, I think that, and this would be most assets, like it allows things like cryptocurrency to, like NFTs to take off, and, Rolexes to go up in value, and cars to go up in value. I mean, everything was oversubscribed because money was cheap. I mean, interest rates have literally been going down since that period of time when boomers said interest rates were 20% or whatever. Like, they've been generally in a downward trajectory for that entire period of time. Like, we haven't seen a real major secular change in the direction of interest rates since the 80s. And so that, like, in hindsight, I wish I speculated more on everything, because it was just like the writing was on the wall. Like, it's like, as long as money is cheap, things are going to go up in value. There's too much money chasing not enough stuff. Now we have interest rates going up and money coming out of the system, and there's not as much money. And they're really trying to get rid of a lot of that because it's inflationary. So I think speculation is gone until the interest rate environment changes again. And I don't know what the outlook is for that. Like, I think we're probably we're dealing with the consequences of that monetary policy and all of that excess cash that was created, equity that was created, wealth that was created, buying power for people to buy stuff, that, it's going to take them years to get rid of that inflation. Like, I think we're probably in for an inflationary decade, right?
Oh, wow.
Really? And it's going to take, you hear this like higher for longer thing. I just don't see how you get all that money out of the economy fast, other than keeping rates high and kind of breaking stuff.
Yeah. And what are some of the top mistakes investors make?
I think, like, I see a lot of people forecasting major capital appreciation in deals. If the deal doesn't make sense without capital appreciation, it's not a good deal, right? Like, really, from my perspective. And like some people or it's speculation, it's not investment, right?
Yeah.
Like, the properties that we buy that cash flow, if you're buying a property at a 6% cap rate, during a bull market, that cap rate will come down. You see cap rate compression. Same thing. Like, we still saw more money chasing multifamily properties or commercial properties or development sites or whatever during the bull run. It's just a bigger asset. It doesn't have to be a house that you're speculating on. So you always will get exposure to that speculative element, even if it's an investment. So you might as well also get sound investment, good fundamentals, cash flow, right? I mean, that's the big one. Making sure that it's cash flow positive and making sure that it's got a good rate of return, I think. So but really the big one is just not focusing on appreciation, not return.
And what are some of the top investment questions that you receive on a daily? What do you think some of the biggest, like, pain points out there are for investors?
Yeah, the big one I get like is market timing. Is it a good time to buy? And I'm like, it's always a good time to buy and sell. No, no, but I'm like, it doesn't matter. Like it's never a good time to buy. It's a good time to buy when you find the right thing. Like start looking hard and find the right property. And if something convinces you, but then the other one is a lot of stuff around the landlord and tenant board, right? And is this like? And I think that there's a big that is the big question mark in Ontario real estate right now. It's like, what's going to happen there? And then the new one that just came out as a result of this policy change, adding 4 units every residential lot in the city of Toronto is, how do I do that, right? And same things like Bill 23, any policy changes, I think are the big questions, just getting understanding around that stuff,
Yeah, it's a lot of some positive changes. And you invest outside of Ontario, right?
No, I mean as a limited partner, like through funds, I do, but direct investing, we only invest in Ontario, so we buy a lot in Cornwall, Ontario, and then in Northern Ontario as well. Okay,
and if you had to, I mean, let's pick top province right now with the most potential. What would you say?
I think, I mean, like I posted a stat like today that.
Calgary.
Yeah, Calgary. Yeah. But I actually don't think, I think it's tapped out on potential. Like I think it's probably overexposed. The fact that you're seeing that much demand, like
true.
So Calgary's the most searched. Yeah.
Yeah, makes sense.
Yeah, I mean, I think it's probably due for a little bit of correction. It's seeing a lot of speculation now. Like, for me, it's like I look for inefficient pricing. So I think Halifax is as good of a market. A lot of the East Coast is as good of a market as Calgary. Like the returns are as good. Nobody's talking about it. People aren't piling into it.
True.
And then I really, really like Saskatchewan, and I like that as like a long-term hold, and I like it because of, I think that when we're talking about economic recovery, we need to diversify the Canadian economy, and Saskatchewan just has really good exposure to agriculture, potash, battery metals, commodity metals, oil, right? And to me, like those are going to be necessary things to grow our economy. So you're going to see a lot of jobs move there, a lot of wealth move there, a lot of income growth, and that just, we know because we've seen it happen in Ontario. That grows, home values, it grows rents. So both cities in Saskatchewan, I'm probably most bullish on.
Very cool. Yeah. Okay. Amazing info, man.
Thanks.
Well, Dan, you've been awesome.
Yeah, my pleasure.
Thank you for coming on and sharing. I mean, I could probably get you going all day.
Yeah, I could talk about this forever.
Where can people, and you do a Twitter thing, right?
Yeah, every Thursday night. I guess today's Thursday, so I'm doing it tonight. 8 p.m. We do like it's called the Twitter Space. It's basically like Clubhouse, but on Twitter. And actually I'm talking about the condo cash flow negative stuff tonight, but do that. It's just like a roundtable of just like whoever wants to show up and shoot the shit about real estate. And we have a pretty regular audience of like a couple thousand people who
that's awesome
come out and listen. Yeah, so that's fully changed the game for me in social media, to be honest. But yeah, I would just Google my name. Like I have a unique enough name. I'm fortunate in that way that it just like shows up.
Yeah.
Last name Foch, F-O-C-H, and it'll give you whatever platform you want to find me on. I try and be active on everything. So yeah.
That's awesome. Awesome. Well, thanks for coming. You've been great, guys. Check him out. We'll post his links in our description. But for now, this is Price to Sell. I want to thank you all for always tuning in, showing some love, supporting. Please don't forget to leave us a 5-star review if you can. Subscribe to all of our stuff. And we'll see you on the next one. Take care.